Hey guys, what is up and welcome to a new NVIDIA daily update video. So today, as per usual, let's talk about NVIDIA stock. Let's talk about what has happened to this stock that has been absolutely tearing it up. I have to say, it is surpassing my expectations slightly here. It is showing a bit more strength than I expected. But again, this is why I don't short, right? I don't short despite me having a bit of a bearish thesis here. Does not mean I'm going to be shorting this thing, and this exactly is why. And another reason why is mainly because Meta. Look at this thing. Imagine trying to short this. Imagine someone's shorting this right now. I mean, look at this RSI. I mean, this is why, exceptions exist, right? But anyways, yeah, so this is why I don't short, personally speaking. But nonetheless, let's jump into it. If you enjoyed, don't forget to hit that like button. It's not financial advice. I am not a financial advisor. And of course, if you do enjoy my technical analysis, thoughts on the charts, etc., well, I do share my thoughts with my members every single day the market is open in my membership section. That link is down below at the top of the description. It is the first line in the description. For just $3 a month, again, share my thoughts, post updates, mainly on Tesla stocks, sometimes other stocks. Today I was talking about a bunch of other stocks like AMD. I talked about Google a few days ago, Amazon, Microsoft, even Marvell I talked about today as well. Marvell is actually not setting up too shabby as well. Potential bullish engulfing here. We'll see how that plays out next week. But yeah, talking about all that stuff, or for $5 a month, access to the first tier, which is what I just mentioned, Tesla mainly, sometimes other stocks, plus NVIDIA. But nonetheless, jumping into it, NVIDIA closing the day with another 2.5% rally, closing at 138.77. It's kind of hard to even imagine me saying that number right now, considering it feels like it was just yesterday I was talking about like 120 or like 115. It feels like just yesterday we were talking about that, and we're already all the way back up into the near 140s. Unbelievable. I obviously sold too early, and I did buy back on this little dip that we had here, but I sold that one too early as well, because yeah, the stock, I will admit, it is definitely showing more strength than I expected, right? I definitely expected a bit of a rejection to begin. It's clearly not happening. But that does not mean that my thesis has overall changed yet, right? I'll go over the major things overall, but the thing I want to mention quickly on the daily is this. Before I go to the weekly, because I kind of want to start off with the weekly, but while my mind is here, I want to say this quickly. So the daily is looking very interesting. Now, obviously, there's still concerns, which I'll go over more later. But the one thing I want to mention before I turn the indicator off is the fact that these bands, both of them, have actually turned green. I did not expect that. I actually thought that we would reject before they turned green, but they actually both turned green, which is a good sign. That is a good sign. That is showing more bullish pressure and confidence than I expected. But there is still an issue, right? Which I'll go over again very, very soon. However, the fact that they're both green is a good sign. So if we get a pullback back into them and we continue holding, that could be a promising sign. That absolutely can be a good sign for the bulls moving forward, which could ignite the pressure to actually break out, which I'll talk about very soon, why there's still some concerns. And, even though it's looking honestly better than I expected for the bulls, there is still work to do. And we're still at pretty crucial, pivotal areas for the bulls to overcome. So let's talk about that, and let's start off with the weekly, right? This is where I want to really start things off. So the weekly, despite today's really nice weekly close, green weekly close, technically, even giving more validity to this bullish engulfing from last week, the market bias is still red. So the market bias is still red. This thing still needs to turn green. Like, this is the most important thing right now, right? As long as this thing is, there's like two-ish things I'm looking at right now, right? Arguably three, but two main ones. This is the first one. The fact that this is still red has me concerned, right? I don't like the fact that it's red. I don't like the fact that we're rallying on this low volume, right? That's just, massive volume on the drawdown, but then very low volume on the, to retrace the vast majority of it back up. I can't say I'm a huge fan of that, right? But I just don't like the fact that this is still red. Like, this market bias needs to turn green, right? For me to have better confidence, right? It's still red. So that's a little bit of a concern for me personally speaking, right? So that's the main thing I wanted to mention on the weekly candlesticks. Now, going back to the daily, right? What do we have on the daily? Well, we clearly blasted past that 618 Fibonacci level, which I mentioned the other day. And at this point, maybe we're heading up into that green Fibonacci level, that 141 to even as high as 142, pretty much the gap fill, really. There is, at this point, I wouldn't even be surprised if we actually come up to that gap fill. But this is where things get really interesting, because this gap fill can obviously serve as a pretty major resistance. We have that, quote unquote, smart money zone, if you will, for the Fibonacci's I just mentioned, which is that green one, which, the 618 is usually pretty good. But if it ever gets here, like for instance, if you flip it and we're having like a bullish retracement back downwards, to me, if I can ever buy in the green zone, that's that's like the best case scenario entry you can get on a bullish retracement. So like a stock rallies and it comes back down, bullish retracement, and it moves higher, essentially. You know what I mean? This is obviously the opposite just for the bears. So like if I was a bear, or if I was someone that, shorts stocks or likes to play puts or whatever, which I don't personally, but if I was, I would be like foaming at the mouth looking for this area right here. This would be like the absolute optimal area to enter for puts on NVIDIA. So let's see if we get that. Let's see if we get that, right? But just keep that in mind that this unironically becomes a real possibility now to get up there, right? Again, it's showing much more strength than I personally expected. However, the main thing I'm still going to be looking at is going to be this, right? So, we are technically in this downward channel here, right? You can see we had this little situation happen. We made this high, and then we had this kind of, arguably lower low that we set. I think it was here. Yeah, this was the lower low here that we set. Then we kind of went up here, set equal highs, came down here, and then we ultimately set this lower low here. So the fact that we set this lower low still tells me that this, it's a crazy dead cat. I'm not going to lie. It is a very impressive dead cat, but there is still dead cat vibes to this, mainly because this lower low is created, mainly because we're rallying on lower volume, and mainly because there's still one more kind of like final boss Fibonacci retracement remaining as a major resistance, which lines up almost to perfection, pretty much at that gap fill, sitting closer to like the 141/2-ish range, right? And as if that wasn't enough, again, we are technically in this downward channel, right, where it's had many supports over here, you can see, but it's also had a decent amount of resistances and potentially another one coming up. I don't know, maybe as early as Tuesday, right? So just, let's watch for that, right? Let's watch for this, right? NVIDIA apparently does have a historic tendency to rally into earnings, but with earnings really not that far away, there is a chance that we get this nice little rally, maybe get that close to that gap fill, and then we do retrace, and then ultimately we could just easily go sideways here for a little bit for the next week or so as we await earnings, and then we'll see, kind of like what it did here. Let me show you a nice example of what it did. It did something like this before. I'm not saying this will play out exactly, but take a look at this. I feel like it's playing out almost to perfection, right? So let's take a look. Where did this retrace to? Let's see if I do this. Yeah, you can see it's pretty much perfect, right? So look at this. The move we're experiencing now, both ways, seems very similar to the move back here, back in like starting July into like August, essentially all of July and August, right, where NVIDIA essentially was doing pretty well for itself, etc., etc., etc. Then it had a very substantial sell-off, right? Very substantial sell-off, got well below the bands, etc., etc., etc. Pretty much what it just did recently, right, close to that 115 region. Then what did it do? It retraced all of it almost instantly, right? Just consistent green, just green after green after green after green, and retraced the vast majority of it. Now, where did it retrace into? Right, almost to perfection into that green Fibonacci retracement level that I just showed you guys is around that 141/2-ish region with that gap fill, right? That's where it sits right now. And look where it retraced to parabolically, right? Also arguably on slightly lower volume as it continued to go up there, right? Now, not as bad as it is now, but arguably slightly, decreasing volume. But the most important thing is this all happened right before earnings, right? Right before earnings. Like this feels like it's playing out almost the exact same way. Like you can't even make this up. Like if I just zoom out and kind of, zoom out over here, let's take a quick look like this right here. Check it out. Zoom out. Let's take a look at both of them. I want to remove the bands for now. Not that. Let's just remove the bands for now, right? Let's just remove all that for now, and just remove all that noise, and let's just take a look at this, right? Let's take a look at this. Tell me this doesn't look almost the same. Let's see what the drawdown even was. What the drawdown was to the very lowest point was about 33%. The drawdown that we saw here to the lowest point, 25%. So not as big of a drawdown, but the similarities are absolutely there. Massive sell-off. Or I mean, you can argue maybe you can measure from here even, right? 26%. But nonetheless, the point is massive sell-off. Decently before earnings, but not too far away. Decently before earnings, not too far away. Then massive rally on lower volume, massive rally on slightly lower volume, right into the green Fibonacci. I mean, again, we're almost there, not there just yet, but almost there, right? And then it went sideways, pretty much as it awaited earnings. That's kind of what I expect. I expect it to pretty much move up maybe a little bit higher at this point because the bulls are clearly just unhinged. But then, ultimately move higher and then probably, go sideways here, between like, 140 to as low as, we'll say low 130s, right? Start going sideways, make some consolidation exactly like it did here as we awaited earnings. And then obviously here it fell. Now, I'm not saying for sure it's going to fall. Obviously, nobody knows for sure. But you can't ignore the fact that, man, that looks pretty similar in terms of behavior. Now, obviously, the candles won't look the exact same. Obviously, it'll still look slightly different. It's not going to be the exact same, literally candle for candle. But the point is that the behavior seems pretty identical, you have to admit, right? Very similar. Also heading into earnings. Like, let's say this rally finished right here, right? This was the last day the rally finished, and earnings was 1, 2, 3, 4, 5, 6, about 7 days away. So if this rally, so let's see, 1, 3, 4, 5, 6, 7. That means the rally, yeah, Tuesday, which again, Monday the market is closed. Tuesday would be that 7th day from earnings, which is exactly where this rally finished before the sideways consolidation. So we could see that one final push up on Tuesday, get into that gap fill, get into that Fibonacci, and then start looking for some sideways action into earnings for the next week, roughly. Let's see if it plays out exactly like that. The similarities are uncanny. You can't ignore them. And the RSIs are both getting into oversold territory, right? If we get that final push up, we will get even more into oversold territories. And then, of course, massive sell-off, which is a possibility still. Why? Because we're still technically in that downward channel, right? Let's take a look at this. I actually just noticed a similarity as I was doing this video. I didn't even notice this, how similar this looked. But it's, man, you have to admit, it's pretty damn close, right? It's pretty damn close. So yeah, so, you know, this downward channel lines up pretty well. Technically, with all these things I just mentioned, RSI is oversold, overbought now. I don't like to buy when the RSI is overbought, right? If I bring out the other bands, you can see here, this one is, because RSI right now is, the Bollinger Band is very expanded, but you can see this one doesn't expand as much, but you can see it's entering overbought territory on the daily here slowly. But the 4-hour is very much overbought and getting into extreme levels of overbought, which again, if we just look in the past, you know, the history of the stock, especially during this sideways consolidation that it had for quite some time, every time it's gotten into these territories of these bands over here, you can see, right, every single time it's been, and the RSI has also been overbought, you know, it's had problems. It's had problems. And, you know, a top was closer than not. So that's what I'm saying is this. Yes, the bulls are stronger than I expected. Yes, it is moving higher than I expected, but I do still expect a short, you know, a pretty major resistance to come in very, very soon. Could still get that tiny push higher since we already got this push from today. I didn't expect it to go this high, but it did. So, which means that tells me that there could be a tiny more push higher, maybe another, you know, couple of dollars, like I said, so, you know, about 141 or so. That at this point wouldn't be surprising in my opinion, but that's where I do expect that rejection to really start to kick in. The channel top starts to kick in, and we potentially have a sell-off. Now, I'm not saying necessarily we have to go to the bottom of the channel, but you have to understand, technically speaking, while we are within this downward channel, similar to Tesla, it actually looks very similar to Tesla also in this downward channel. You know, you can't ignore the fact that there is a chance that it rejects here severely and does make its way to the bottom of the channel one more time. On the flip side, if we break above this channel, that's really, really good. And especially if we break above this high and essentially break this potential chain of higher highs and higher, or lower lows and lower highs, that will be extra bullish as well moving forward. But there's still a lot of work to do for the bulls. It's a very nice rally, very powerful stuff. I will admit, stronger than I expected. But nonetheless, there is still some major, major concerns coming up right here. And we're really not far away from still what could be a very major rejection. So let's see how this ultimately plays out. And yeah, let's see. So that's kind of my current expectations. Can't fully ignore this just yet. But if we break above it, then we'll most likely come back, retest, and make our way higher. So one of these two things will happen. I don't know which one, but we're probably going to find out relatively soon, at the very least, post earnings. But yeah, thanks for watching. And as usual, I'll see you on Tuesday. Peace.